Hello, everyone. I hope you're doing well. I wanted to talk again about the US dollar and take a look at the chart. And I know this isn't a popular point of view at the moment, but I think the US dollar, we're looking at an 8 hourly chart here, so a little bit more of a short term time frame. But I think the US dollar is in the process of consolidating after completing a bullish reversal pattern, a bottoming pattern, a broadening falling wedge. I'm going to draw the first line there. Keep in mind these are 8 hour candles. You can see that the US dollar, after making a 3 year low in January, in this broadening falling wedge pattern, which is generally a bullish pattern, a reversal pattern, we could see pretty clear touch there, and then once it broke out, now there was a double top there, but we won't look at that today because the purpose of this video is looking at the current price action, the breakout. We can see that was a pretty significant level there as well. I'm just going to put a dotted line across there. But you can see a lot of consolidation around this level, testing, breaking out, and then of course breaking out from this resistance level here. Lots of consolidation. It's bouncing across. I often talk in videos about how when there's a breakout, you often return to the scene of the crime and you test the breakout. So I'm just going to clean that up again because I've made that a bit messy. But you can clearly see the breakout and then the return to the scene of the crime to test the breakout, and now it's holding that level. So we're likely seeing this broadening falling wedge pattern continue to play out. It's so far the US dollar is respecting it's testing the breakout, but it's respecting the breakout. And if we go back to a longer term time frame, this is a 5 year chart. Let me just again clean that up and bring back some of our momentum indicators, the MACD and the RSI down the bottom. We can see that the US dollar has been in this sort of, well, it's really just going sideways. It's at the same point it was at in July 2023 and February 2022. It's come off the lows, but we could see it was in this sort of, on a larger time frame, also somewhat of a, I don't know if I want to call that quite a falling broadening wedge yet, but on the longer time frame, it may still. Now, you could draw it across to there. I don't normally like to do that because I think that this is a separate trend. But we can see if we take the spike lows, maybe let's zoom in a bit. You can see, hopefully on your screen, you can see those spike lows. There was a touch there, a hold there, a touch there. It didn't quite come down for a fourth touch. It was bought up pretty quickly. And then, of course, we can see as the price was making lower lows, momentum indicators, the MACD, and then the RSI down the bottom making higher lows. So that's on a longer time frame, positive divergence. Got a big candle wick there. Now, I know that it did briefly trade there for a day or two to a fresh low. But we could almost draw the support line across there at around the 96.60 level and say that this 3 year low on positive divergence was very quickly bought. So on a longer term time frame, it's not yet breaking out from this consolidation pattern. And we can see, this level around 100 is very important. That's the level that it probably needs to get. Again, not that we necessarily want the US dollar to go up, but if you're the US dollar and you're looking to break out, you would say this 100 level is pretty key. So short term time frame, it's looking like it's forming or has formed a bullish reversal pattern, a bottoming pattern, that broadening falling wedge that we looked at the shorter time frame. And on the longer time frame, it's got to break that 100 level pretty clearly. But again, it's looking more like the US dollar is in the process of forming both short-term and long-term bottoming patterns. Obviously, what's going on in the Middle East can throw an absolute spanner in the works, but I would say for those of you who continue to call the death of the US dollar, just be a little bit wary on that call. The price action in the market is showing that US dollar selling is probably exhausted. And when I say exhausted, I don't mean it can't go down. I mean that, like the selling is, it has been somewhat exhausted and it's looking like it wants to break out and end this sort of long-term downtrend that's really, I would say, been in place probably since September 2022. You could say, the trend has been down. There was, a brief period where Trump got elected, but clearly the trend has been down. Maybe you could call that. Let's just have one quick look at that, and we could say, well, the downtrend started here. We'll call that a false breakout. Trump got elected. Everyone thought things were great, but clearly this was a downtrend with touches there, touch there, touch there. False breakout. Look at that. It returned to the scene of the crime, had a little consolidation and went, no, thank you. We're not holding that. So I would call that a false breakout. Touch there, touch there, touch again, and look at where we are today. It's trying to break out from that longer term downtrend as well, if you count this as a false breakout. So again, just be wary. I'm not calling for a massive pump in the US dollar. I'm not saying it's going to do this. I'm just saying for those of you who are positioning your investments based on what a lot of the gurus online are telling you about a collapsing US dollar, the US is done. No one wants to buy the US dollar or invest in the US market anymore. I can show some data on that at the inflows of international money into the US stock market, into the US bond market. There's been a lot of that, but this is a charting video, and I just be wary. The trends are indicating that the US dollar, while it's taking a long time, it is continuing to move relatively sideways over the past sort of 6 to 12 months, and it's looking like it wants to break out from this longer term downtrend. Thank you very much for listening. Cheers.